What is going on, investors? Hopefully, guys are doing well out there. That is right. It is Friday. It is Christmas Eve. And it is time for the FAANG Stock Recap Show, where every Friday we join you here on the channel and recap all the news and the technicals of the major FAANG stocks each and every Friday. We kick things off like we always do with Facebook. Start of the week at 326. Like a lot of these stocks, I tell you what, the sellers just dried up this week. And I'm recording this on Friday. There was no trading today on Friday. So these are Thursday's close on all of these stocks. Facebook ended the week at $335 per share. Now, Amazon, Facebook, Twitter, among the firms to scrap their in-person plans for CES. CES is the Consumer Electronics Show that happens. It's one of the largest shows in the world, and it happens in January in Las Vegas. Now, these companies are scrapping their plans to attend in person, although the event is still going to continue in person. So if you happen to go to Las Vegas, you still can enjoy it. But a lot of companies are starting to pull their plans to actually attend the event, obviously due to the health situation. But this can create some news cycle. It can create a new release of products. Certainly from Facebook, we might be expecting something on the Oculus side, and certainly from Amazon and some of these other companies, we might expect some kind of announcement, some kind of breakthrough technology, or a technology that might be a year or two away. Not all the time when you see announcements at CES, they're emerging technologies. Sometimes they're a year, 2 years away. Sometimes you're seeing just prototypes of devices. It will be interesting. Now, January can be a big month for news. Obviously, the tail end of December, we've got the holidays, news kind of dries up, but January can be a big month, especially with tech, with the CES, but also for the fact that we have earnings. So the third week and into February, we have earnings for all these companies. We'll start announcing those dates as we get a little closer to that. Now, moving on to Apple, started the week at about $169 per share. Like we said, sellers dried up, and we're now at $176 per share on Apple. Now, Apple's supply chain issues will push sales into next year. This is according to Gene Munster, and obviously anecdotally, I'm recording this actually on a new Macintosh laptop, and that took over 30 days for it to arrive. If you're trying to buy an iPad, those are taking longer to arrive. If you're ordering an iPhone, the delay can be 1 to 2 days depending on where you are, and that's certainly rare. Typically with an iPhone, you could order that day, and then if you have an Apple store near you, you could go pick it up in store. And so analysts are starting to argue that a lot of these sales, or some of these sales, are going to be pushed into the next year when it comes to Apple products because of supply chain issues. Now, Disney's Bob Iger, who I think officially left the company maybe this week, or he's about to, he still thinks Apple merger could have, quote, gotten there if Steve Jobs had lived. Now, this quote and this story is a little deceiving because I actually watched this interview. Now, he didn't imply that they would have gotten there on an acquisition, that Apple and Disney would have combined. What he said was that they would have gotten there to discussions. No discussions between Disney and Apple actually took place, but he thought that if Steve Jobs had lived, that they would have gotten there on terms of discussing the merger. Obviously, something like that likely not to happen anymore. Apple, Microsoft to hit the $3 trillion market cap in 2022. I don't think anybody's surprised on that. Apple's currently sitting at about a $2.88 trillion valuation, so we could see that happening as soon as a month or so from now. Now, Apple's iPhone to have a 48 megapixel camera next year. Currently, the highest megapixels on their camera is about 12, so that's quite a jump, and that could encourage people to come in there and buy this new phone. You're also likely to see support for 8K video recording. Certainly not a feature for everybody, but certainly someone like me who's on the previous generation of iPhone. I take a lot of pictures and videos of my children. The highest quality I possibly can get is worth it, quite frankly, for me. And certainly if you're using this as a blogger or a journalist or something like that, certainly would spur a lot of demand. Now, Amazon started the week at $3,348 per share. We are in that tight range with Amazon. Ended the week at about $3,421 per share. Now, Amazon's AWS business is said to see antitrust scrutiny from FTC's head, Lena Khan. Now, she's looking into this, and we'll see what happens. We obviously know there's investigations into Facebook, investigations into into Apple, investigations into Google. So far, we have not seen any charges or any recommendations put into place, but it could be into the new year. Obviously, she has the President Biden's administration is only barely a year old, not even a year old in terms of his inauguration date. So there's still plenty of time here, and she obviously didn't get confirmed from day one, so she hasn't been on the job that long. I think 2022 will be telling because they will want to push these things along and start seeing some progress on these things in 2022. Obviously, a key election year as it's midterms for most of Congress, and so we'll see how that dynamic changes things. We'll see if that dynamic impacts anything here, but it could just be pressuring. This could be a lot of lip service, but I think we'll likely see something come down from the FTC at some point. Amazon seen more trustworthy than Apple, and I have to laugh when I read this headline because this is a Washington Post survey. So the Washington Post, which is owned by Jeff Bezos, who obviously owns a large portion of Amazon, well, his newspaper that he owns found that his company, Amazon, is seen as more trustworthy than Apple. I just threw that in there to give you a little bit of laugh. Amazon, Meta, Netflix among top internet stocks at JP Morgan for 2022. So I threw this in here because I actually saw, not necessarily for Meta and Netflix, but for Amazon in particular, when we go over the technicals with Amazon, as you know, we've been in a really tight range for over a year on Amazon stock. And what happens is, man, that valuation is starting to, I don't want to say it looks attractive, but it certainly looks more attractive the longer that Amazon goes in that sideways consolidation mode. Well, we're pulling forward revenue. We're pulling forward earnings with Amazon. We know they don't flow a lot of earnings down to their bottom line, but Amazon is one of those stocks that really underperformed this year. In fact, I think just year to date on Amazon, I don't think you're up just 5% on this one year to date. And so obviously when you compare that to the other FAANG stocks, some of them up 20, 30, even 100% for some of these stocks. Well, Amazon really lagged behind. And so I saw analysts pile into this from a recommendation standpoint, saying that Amazon could outperform next year due basically to its underperformance in the current year. Moving on to NVIDIA, started the week at $276 per share, ended at $296. So that was solid. We thought on last week's show that NVIDIA, if the seller stayed in the market, that NVIDIA and certainly Microsoft as well could walk back. They were at the top of the range. The fact that they didn't, we'll talk about that from a technical perspective. Not a lot of news out of NVIDIA this week. Maybe during CES, we'll see some announcements from NVIDIA. Moving on to Google, started the week at 2,816. This one's actually, I'll show you from a technical perspective because I got a new computer. I had to redo a lot of my charts. And I tell you what, we take a step back on Google and I'll talk about it from a technical perspective, but you've pushed back up into the uptrend at about $2,938 per share. This was a really interesting story. TikTok tops Google to become 2021's most popular website. Now, TikTok briefly passed it during the year, but towards the end of the year, TikTok really solidified itself as the top website. Now, I don't necessarily think this probably says more about TikTok than it does Google. It doesn't necessarily mean Google's on the decline, but I think what broadly this happens to say is how fast the internet is starting to move and how a company like TikTok, which really hasn't been around that long, could overtake Google, which has been one of the world's most popular websites for decades. We're talking decades now. And the fact that an upstart company, which really, personally, I don't use, I'm guessing a lot of you out there watching this in terms of the age demographic that we have here on the channel, don't typically use this site, but it's just showing you how quickly a site can up and come and all of a sudden become an upstart all the way to the most popular website. And again, I don't necessarily think that is necessarily a bad thing for Google. It's just it actually, I think, is a good thing for tech as a whole, that upstart companies. And it also maybe flies into the face a little bit when you talk about antitrust stuff. So when Facebook goes in front of the antitrust scrutiny, they can say, well, look, TikTok's the #1 website in the world. Okay. And so these are the types of things that actually show that the competitive environment, while it's not perfect, is certainly there from a certain respect. Now, moving on to Microsoft, started the week at 322, up nicely to 334. Got to talk about that from a technical perspective as well. Now, we've talked a lot about how these companies are not going to be able to grow via acquisition, and that's why most of them have multi-billion-dollar buybacks. Some of them pay a dividend, but Microsoft did win approval for their EU, and this is from EU antitrust regulators, over their Nuance acquisition. This was a $16 to $20 billion acquisition, depending on how you want to calculate it, and this has to do with cloud healthcare services. So it's I don't want to say it's a niche market, but it puts Microsoft in a market that it didn't already dominate. And so certainly Microsoft can take Nuance, which is already a multi-billion-dollar company. They can throw their weight behind it and their customer base behind it. And I think this will be absolutely phenomenal for Microsoft shareholders. Also, the fact that Microsoft just like Apple, has a huge amount of cash sitting on their balance sheet, just sitting there. And quite frankly, it's depreciating. When you look at inflation, the cash sitting on these companies' balance sheets, quite frankly, is depreciating. It's going down. And so they need to use it. I want these companies to use it. And if you believe inflation is going to be hot in 2022, just like it was in 2021, you want to see this, okay? We got to see more of this. Now, obviously, with the regulatory environment, it's difficult, but Microsoft was able to pull it off. Now, AT&T is selling its advertising marketplace, Xandr, to Microsoft. People forget quite a bit that Microsoft still owns Bing. I believe they still have a partnership with Yahoo to run kind of the advertising side on that. As an online advertiser myself, I will tell you, and it might be surprising, the number one place that I spend the most of my budget, okay, it's very close between Google. Google and Microsoft actually usually exceeds. I actually spend more money on search ads on Microsoft than I do Google. And that's really interesting. And people forget that Microsoft has a large internet advertising business. And this is another way that it can grow. And I'll be honest with you, I love Microsoft advertising. I think a lot of people throw it away. They ignore it when you look at Google, when you look at Facebook, certainly like a Twitter and a Pinterest, and maybe even TikTok to a certain degree as well. Well, people pay attention to that. Shh, if you're an online advertiser, Bing, Microsoft, might be the best value out of all of them. Now, moving on to Tesla, which probably had the biggest week. Hello, we held that $900 level like we talked about on last show. We went from 910 on this one, boom, just absolutely didn't even hesitate at that $900 level, and we exploded up into the thousands, ending the week at 1,000, almost, actually after hours, I see 1,000. Elon Musk would be very proud. The stock at the end of the week in the after hours trade, $1,069 per share. Why did Tesla jump today? They had progress in Germany and no more Elon Musk shares. We'll have to put no more because Elon Musk, like a lot of executives, have planned sales and he doesn't have any really input into that. Those are done automatically to avoid any regulation, to avoid any insider trading scrutiny. And so he says that there's still some of those probably flowing through the pike, but his vast majority push to sell multi-billions, he said on Twitter he was going to pay about $11 billion in tax this year. Well, he has raised most of that by selling. Now, the other news of the week is Germany, which has said, I think for 4 or 5 months now, that they are about to grant regulatory approval for Tesla to go full-blown production in their new Germany Gigafactory. Well, the Germany officials have constantly said, okay, it's going to come this month. And then that month goes by and then they say it's next month. Well, I tell you what, you think you got bureaucracy here in the United States just following this story, and there's like an airport being built in Germany as well. There is so much environmental bureaucracy in Germany. It's unbelievable. So what this shows me, if Tesla can finally get over this hurdle, and they indicated, regulators over in Germany indicated sometime in the beginning of 2022, they said early part, so it could be January, could be February. I don't know what you consider the early part of a year is, but my guess is the first 2 or 3 months, we might finally get that Gigafactory in Germany. Now, this will obviously impact Tesla for a certain degree. They are already making these vehicles in China and exporting to Europe. This will allow them to make these in Germany and likely cut down on costs, maybe tariffs, maybe different types of costs that rely on going from China to Europe. Now you're going to be able to go from Germany, which is inside Europe, and kind of filter that. And also what this shows me, there's a massive moat around this business. Okay, think about Lucid, think about Rivian. They're just getting started here in the United States. If they want to expand to Germany, guess what? all those hurdles, all that regulatory stuff is probably likely just going to get worse and get harder as the years go on, not easier. And so if Tesla can cross that hurdle, get a factory open up in Germany, well, I tell you what, that can be a massive opportunity for them and a massive moat around their business from a competition perspective, at least from the upstart ones. Obviously, we know VW and Toyota and certainly other car makers out there, and certainly the European car makers like Mercedes and BMW already have a presence there, but it will kind of keep the upstarts at bay to a certain degree. Elon Musk, like we talked about, hit his goal of selling his 10% Tesla stake. We talked about that actually on last week's show, that we thought that he was there. And so that's why you tune in here to the show. We actually front run a lot of these press releases. So we talked about last Friday. In fact, and last week's show was delayed a little bit. We talked about it on Sunday. This press release was just 2 days ago. Okay. And so we front runned it. We knew that Elon Musk was likely towards the end of his sales because he indicated, or at least CNBC indicated, how much he would owe. And we thought that Elon Musk wouldn't likely go over and above what he owed in taxes. Electric vehicle stocks trade lower after green funding hits a Manchin, Senator Joe Manchin's roadblock. So as you know, from a political perspective, the quote, Build Back Better bill looks like it got stalled out, at least for the end of the year. Senate kind of closes its doors and will resume next year. We'll see if something, a revised plan of this, a piecemeal plan. Again, President Joe Biden, look, he's not very popular if you look at his poll numbers, but let's give him the benefit of the doubt. He is barely a year into his administration, and this was a very, very big plan. And on the backdrop of inflation and already very much exceeding government expectations from a spending side, it was going to be difficult to push a plan of this value through. Now, I think politically it would be wise if they start piecemealing different pieces of it to try to see if they can do smaller packages of it. We'll see if that's the strategy they decide to take, but it looks like, for me, from a political perspective, pushing through this $2 trillion deal was not going to work. Now, it did have incentives in there from an electric vehicle perspective. So if you were a union electric vehicle maker, so think of Ford or a GM, you were going to get a $12,000 tax credit. If you were from a non-union electric vehicle maker, much like Tesla is, that was going to be a $7,500 tax credit. That looks to be off the table at the current time. But if you're in the market for an EV, again, keep a close eye on this. It could be that Congress and the Senate resumes next year and they're able to kind of come together a little bit and maybe piece together certain points of this legislation. Look, I'm not endorsing this legislation. I'm just telling you from an investor standpoint, always deal in reality, okay? Your voting and what you want passed can be over here, but as an investor, always deal in reality. And the reality is, as investors, we have to assume maybe they get something done. If they don't, whatever, no big deal. Status quo, not that big of a deal. In fact, I think it would hurt Ford and GM and those union ones that were going to get a large tax credit on those vehicles, because $12,000 tax credit on a car is massive, okay? And it could be the reason, especially if you're talking about a fleet of vehicles, but even an individual as well, a rather wealthy individual looking for a good tax way to kind of write things off on taxes, well, those clean energy things was probably going to be a good idea. Now, moving on to the technical segment of the show, we'll kick things off with Facebook. Now, unfortunately, I got a big red line here. For some reason, this may not work on my new Mac. I might have to change software in the coming days on this. But look, we're still in a downtrend, actually, with Facebook, okay? We had a high up here, lower set of highs. We're at 335. We're at a lower set of highs on this one, quite frankly. Now, we've got support down here at 300. We're looking in the coming weeks. Again, I'm likely to expecting thin trading next week as we get into New Year. There'll be a holiday. There'll be a break during the week as well. And so I'm expecting thin trading next week. If for some reason we can get above 350, that will take out this downtrend. Or maybe even more specifically, if you can get above 340, maybe even 345, wouldn't necessarily suggest that this downtrend is over, but it would suggest that we could be reversing here. Now, if we continue to go lower, you have buying opportunities south of about $320 on Facebook. Moving on to Apple. Now this one, look, it's moved up into this uptrend. It's looking nice. We had our previous area of consolidation. We had our previous highs at 157. We talked about when we broke above it. Now we're up here at about 175. It looks like we want to retest these highs that we made just a couple of days ago at about $180 per share. Quite frankly, I would expect this stock to stall out up here at 180, but if for some reason the markets just are really bullish, and again, in a holiday week, in light trading, the sellers tend to dry up and you just have buyers, and that can push this stock higher. You get above about a 182 on this one. Well, this shorter term uptrend that we're making, that's intact, and this one continued to move higher. Now, what we're looking for with Apple is at some point, maybe a little bit of an area of consolidation at some point. That will certainly help this stock, I think, to a certain degree technically, but for the most part, we are in a steady uptrend with Apple. Moving on to Amazon, like we've talked about, this stock has been locked in sideways consolidation. That's why I saw several analysts pile in this week saying, hey, this stock could outperform next year because, again, like we talked about, when you go sideways, all of a sudden your price to sales multiple starts to go down. Certainly if earnings come in on Amazon on the higher end, well, that price to earnings multiple starts to come down. And certainly as you start to compare an Amazon valuation or a market cap perspective to an Apple, to a Google, to some of these other companies that have spectacular years from a performance perspective, well, all of a sudden Amazon, I don't want to say it's a value stock, but it certainly looks a little bit better in that situation. Now, we have made a low, a higher set of lows, and we did hold this level down here. This is the smallest and like not a very large uptrend, but Amazon is holding this upper channel that we're in. Now we're looking for a break specifically above about 3,500 on this one, but really to really break out, and this is what analysts really want, is you're looking for a break above 3760 on this one. You get above that, then you could have the move like we've seen with Apple, like we've seen with NVIDIA, like we've seen with Google, like we've seen with Microsoft and Tesla. All these stocks, quite frankly, that's what we're waiting for with Amazon, and I honestly would be surprised if it doesn't materialize sometime in 2022. If you're not overweight or you don't have any shares of Amazon, I think even in the upper end of this channel that we're in, it can be a buying opportunity because we're betting on this breaking to the upside sometime next year. Moving on to NVIDIA, this one's actually consolidating up here in this range. Okay, so we broke to all-time highs at about $230. We talked about how, boom, we rocketed upwards, okay? And now we're stuck in this channel between about 270 and 330. That level at 270 is holding, okay? It's held, it's kind of was its rocket point here, but it's held 1, 2, maybe even 3 or 4 times here over the last few weeks. And so that level at 270 looks like an area where buyers are stepping in, but it also is an area where if we were to break through 270, I would expect we were to come back down, obviously, into areas much lower. I would say south of about 250 is what I would be betting on. This one's flagging out nicely on the bull case side. We're looking for a break above 230, probably more specifically up above 340. That would show that this uptrend is still intact. I mean, we are in a very steep uptrend with NVIDIA. It would make sense that it would flatten out a little bit. So the sideways consolidation up here in NVIDIA, not necessarily a bad thing at all. And it actually is looking really good, looking better from a technical perspective. The fact that we held this level, the longer you can hold this 270 level, just like with Amazon, you can start making more sense of that multiple. The companies can start pulling forward earnings and sales into the future, and that can make this multiple and this valuation start to make a little more sense. Now, moving on to Google, what I thought was interesting is since I had to redo all my charts and all my lines, and quite frankly, I think we're going to have to switch to maybe TradingView or something like that because these charts just aren't working as well on this computer, the software that I'm running here on Apple. And so look, what I did is I wanted to take a step back with Google, and I noticed, okay, we actually had our trend line looking like it was broken. Well, it looked like instead of being a super steep uptrend, we've just kind of tilted it a little bit. And so right now with Google, since we've gotten back up into this $3,000 range, well, you could argue that first of all, we're still in an uptrend with Google, but what we've argued here on the show to a certain degree is we've started to go sideways a little bit. The trend is just a little less steep. So I still think the top of the range is up here about where the stock is right now at about $3,000 per share. I would expect if we get to this level, we would come back down, but as the stock comes back down, that is a buying buying opportunity, quite frankly. Okay, now if we were able to break above this 3,000, that would be an incredibly bullish sign on Google and just would show you that this run is not even close to being over. Moving on to Microsoft, this one looks exactly, I feel like deja vu. It's exactly like NVIDIA. We have broken to all-time highs and now we flagged sideways up here, but longer term, you are absolutely just kind of in this big uptrend with this one, okay? Same with NVIDIA as well. Now it's starting to flatten out, at least at current prices. Right now, we're approaching an area where I would say there would be some resistance. Last week when we recorded the show, we were actually on a level of support. That support held. I was hoping, I think a lot of you guys were hoping that it actually wouldn't hold, okay? And that we would actually break lower on this one. Unfortunately, if you want to accumulate these stocks, that did not happen, and we actually went up, and now we're approaching an area of resistance overhead at about $340 per share. More specifically, you're looking for a break above 350 on Microsoft to show you that this sideways consolidation was brief. And look, when you look at Microsoft, it has a lot of brief areas of sideways consolidation over the last year or so. So this could be another area where this is just a brief area. But if we get rejected here at 340 and we pull back to the 320 range, that can absolutely be a buying opportunity for Microsoft. Moving on to Tesla, I got this zoomed out, okay, because I did want to show you this, okay? This goes all the way back to March of 2020, kind of the bottom of a trend here that we made. A lot of stocks, quite frankly, bottomed in March of 2020, and I want to show you this. I mean, look at this uptrend that we're in Tesla. So I know some of you may have gotten in up here in the upper $1,000 per share with Tesla. As stocks go up, retail tends to pile in. I don't think a lot of retail investors are tuning into this show. I think you guys are absolutely sophisticated investors. You're taking the time to educate yourself. But if you did happen to buy at this upper channel, no, but I wouldn't say that's a big deal, okay? This stock has this stock has been on this uptrend. It got Tesla, like a lot of stocks, but more specifically Tesla, is highly volatile. I would say especially to the upside, because notice on this trend, we went from about $400 per share all the way up to $850, and then it came all the way back down to $550, but then we slowly traversed upwards, and then we went from about $800 on this one, boom, all the way up to $12. Now we came back on last week's show, we talked about how we thought this $900 level was going to hold, just for a number of different reasons, from a technical perspective, from a valuation perspective, and certainly it did. And now we're kind of up here at about $1,069 per share, a value that would make Elon Musk very proud. That's where the stock is right now. Now, more specifically, in the very, very shorter term, you would have a little bit of a downtrend up here if this level at 1069 does hold. So you had a high up here at 12. You had another series of highs here at 1150. Now it looks like potentially maybe you're making some highs at 1069. So if you thought that you missed Tesla to a certain degree, you didn't get it down here at a 900. I started buying this one. I stepped in a little early on this one, and that's what I tend to do on a longer term investment. If you're doing options, if you're day trading this, certainly if you're swing trading this, you want to be way more precise. And so when I shout out that I'm buying, just keep in mind, I'm not trying to pinch pennies. I'm not trying to get it at the low. So I actually stepped in this one, started buying it at about 1,000, and I bought it 2 or 3 other times as it made its way down here to about $900 per share. I did not get it on the dead low. I think the lowest price I got on this one is about $920 per share, but it reversed down here at $930, or about $900 per share to be exact. Now, what I am seeing though, again, we had made a high up here at $1250, another series of highs at $1150, basically in $100 increments. It looks like we've made a lower set of highs at here at 1069. Now, this will be predicated on Monday. If we get rejected at this level and we come down lower, that's where you can have your buying opportunities with Tesla, because like I talked about when we first opened this chart, we are still in this mega uptrend. So any pullback to anywhere in the vicinity of this line, whereas if it happens in the very short term, we're talking in the next month or two, or really the next couple of weeks, anywhere in the $850 to $900 range, you get a pullback on Tesla like that, I would not panic. I would not be concerned. In fact, I think that is an area where you can absolutely buy buy this one because like we talked about, along this upward trend with Tesla, we've had an area where it really ballooned higher and then came all the way back and back tested this trend line. I think that's where we're at now. We've ballooned super high, kind of maybe got ahead of our skis to a certain degree, and now we're coming back down to this trend line. As long as you don't break this trend line major, like in the next couple of weeks, you get below 850 on this one, that would show me, well, this trend line might not be intact, and we'd be looking for pullbacks to sideways consolidation, probably down here in the 6 to 650 range. So just understand with Tesla, high risk, a little bit high reward as well, but certainly more volatile than the other FAANG stocks that we tend to cover here on the channel. And so don't be surprised if you buy this one at 900 and if it breaks, it comes all the way down to 600. That's why I tend to get in this one in small pieces. I don't tend to push the chips in the table. I don't do that typically with any type of investment unless we get a major pullback that I seem to see unwarranted. This is absolutely a warranted pullback that Tesla has made, but it is not broken trend. It is still in an uptrend, and I think the tailwinds are still behind Tesla in the coming year ahead. That was the FAANG Stock Recap Show. Merry Christmas. Happy New Year. I hope you all have a wonderful holiday, and we'll be back again next week. Good luck with your investments.